Hello there, this is FairBinaryOptions.com, and we are trading now one of the Japanese yen currency pairs that are not that much common in taking a trading decision, but nevertheless we have a nice pattern here. The pattern is being called a contracting triangle that acts as a reversal pattern, and this contracting triangle is a non-limiting one. If you want, the triangle looks like this. It goes with, you have a move to the downside that is aggressive, that establishes a low. Then you have nothing but A, B, C, D, like this, the E wave, and then the market exploding high all the way to here by the time that the B2D trend line is broken. This should be our B2D trend line from here to here. Like this. Now, this should be an X wave, or an intervening X wave, or a connecting X wave of the same degree, but basically connects the prior move all the way to here. In our situation, in our pattern, in our current price section, the X wave is nothing but this one in here. Then market of the same degree goes with wave A, all the way to here. So we have a wave A in here. Then we have a B wave. In reality, our B wave is all the way here. Then we have the C wave to the downside, A, B, C, but I would say the C wave is not done here, the C wave is done here. And I am going to explain you a bit why. The reason for that is the fact that, or comes from the fact that a non-limiting triangle should be a bit ugly, not respecting the proportions, the higher highs and lower lows, and the higher lows, the low highs and higher lows in a classical triangle. And there, this to be A, B, C, this to be the D wave. This to be the D wave like this, and then to look for an E wave. We may have a chance that the E wave is already being done in here. So the B2D trend line should be this one from here to here. And of course, this to be the E wave. And this to be the C wave in here. So from this point of view, we should look for a triangle that travels with the, or within the A and C trend line, like this. And the B and D trend line, like this. And as you can see, the triangle it is still contracting. It may be, for example, that this will be the B and D trend line, and then to have an E wave, something like this to the downside. It may be, but this doesn't change the fact that this market in here it is still bullish. And from my point of view, path of least resistance will be to attract those highs. But because we have the possibility that the D wave to be end at lower levels, I would like to go and buy call options with as big an expiration date as possible. So I would go with end of month now. It's not that big as we are on the 21st of April, but nevertheless end of month should do the trick on the Canadian and the Japanese yen. So let's go in here and say that we are buying call options with end of month expiration date for the Canadian dollar and the Japanese yen on a move that seems to be bullish enough to trigger some stops to the upside. Thank you very much for being here. We're looking for a triangle that should form or should act as a reversal pattern. So by the time the B2D trend line is broken, then there should be no way back. Thank you and bye-bye.